In today's video, we're gonna go over the 3 key factors that turn me from an unprofitable trader into a full-time day trader, helping thousands of people all around the world do the same, all because of these 3 things I'm about to show you. I've been day trading for over 4 years now, and I'm telling you guys right now, these 3 factors that you may think you know, I'm really gonna dive deep into all the characteristics and dissect what I think is the most important about them and how you can do the same. The purpose of this video is to walk away knowing that if you go and do these couple things and go and apply them to your own charts and your own accounts, you will start getting the profits that you've been seeking. Before we get into the first key factor, make sure you guys are listening to them all the way through, because I'm telling you, I'm going to go more in depth than just these general names. You may think you know these factors, but once I actually dive deep into them, I'm going to look at it a little bit different than you have. The first key factor we're going to go over is consistency. And I know what you're saying. This is what I'm saying. Don't click away, because you might be like, oh, consistency, I've heard that a million times. No, don't be just consistent on like, oh, you're trading every day. No, there's a couple things I'm going to go over that you have to be consistent with to become a profitable day trader. The first thing you have to be consistent with is your strategy. One of the things that was for sure holding me back to becoming the profitable trader I wanted to be was changing my strategy every time that one strategy stopped working a little bit. One week I'd be trading breakouts, and once that started kind of failing, I would start trading like liquidity grabs, and I'd be looking at supply and demand. And it's like you're mixing all these strategies where they're not going to do the same every single month. You have to have proof of concept by that. Like if you stick with a strategy, you have a certain win rate, certain criteria you're following, being consistent with it, and then over time, you're going to be profitable with that one strategy. If you're not consistent with one strategy and you're just chasing after all these different strategies, once you see a new YouTube video pop up, that is going to hold you back tremendously, literally by months, trying to get to the place that you want to be at. So once you're consistent with the strategy, the next thing you have to be consistent with is your trading times. So many of you guys out there just trade when you're free. You don't have set times of like New York Open or London Open or even sometime in between. You guys are literally trading whenever you're free. There's a reason there's such things as kill zones. When the market's open, you're gonna get a lot more volume. If you're trading at times when there's no volume, that is definitely gonna be a big factor as to why you keep losing. A reason why I love trading times and kill zones is you'll often see patterns within the market with certain pairs that always happen around the same time during certain sessions. Being consistent with your trading times also just goes into having a consistent routine. You guys should be forming a routine around your daily schedule and when you can fit trading in, and not try to fit it in at your lunch break at work or because you just dropped your kids off and you have a little bit of time to go try to trade gold during Asia session. No, stop all that. Whatever your schedule is now isn't going anywhere. You can't just take off work to start trading. So form a schedule before work, after work, at night. Make sure you have set trading times and a set routine you're following, and over time you're going to gain that consistency and you're going to start seeing it reflect on your account. So definitely make sure you guys are being consistent with your strategy and consistent with that strategy during certain times in the market. Create a routine and be consistent with it day to day. The second factor that I think played a huge role in me becoming a profitable trader, which might have some controversy in the comments, is risk to reward. I myself was definitely one of those traders that kept chasing those 1-to-1s, 1-to-2s. I didn't even have like any type of exit criteria. I just was getting out of the trade based upon how I feel. I'm telling you guys right now, when you start paying attention to holding your winners a little bit longer and going for like even 1-to-2s, 1-to-3 risk to reward is going to help you out tremendously along your journey trying to get the profits that you're seeking. We are taught too often in society that we have to be perfect. I'm going to tell you right now that you cannot be a perfect trader. There's no trader out there that has 100% win rate, or even in like the high 90%. It's just really unrealistic. But you can't blame yourself by being down, because we are taught in society, like in school, guys, if you get a 90% win rate, you have an A. If you get like a 60% win rate, you have a D. If you're getting a 50% win rate, you are failing that class and you're looked at as a loser. Whereas if you compare that to trading, if you have a 50% win rate for good risk to reward, I'm telling you guys right now, you will still be so much more profitable than so many other traders out there. A lot of you guys just think you have to be perfect and every trade you take has to be a winner. Where I'm telling you right now, that is unrealistic. If you become okay with being a loser, right? Having a not as big win rate, but going for bigger risk to reward, I'm telling you right now, find the markets so much more easier than what you're doing right now. I myself have exit criteria on when to get out of the trade, but I mostly am aiming for that 2.53% mark, where I'm going for that 1 to 3 risk to reward, because I know with all my data and proof of concept over this one strategy I've been using for years that I have around like in the mid 60% win rate. Going for 1-to-3s with a 60% win rate, I'm telling you right now, I am chilling beyond fine. I can lose 3 out of 10 trades or 6 out of 20 trades, and guess what, guys? If I go for those 1-to-3s, I'm still going to remain profitable. If you guys out there can't win 6 out of 20 trades going for like a 1-to-3, I'm telling you right now, it's not just about the risk to reward, it's your strategy. That's why I said you got to be consistent with the strategy first, and then once you're consistent with it, dial down your risk to reward. And I'm telling you right now, you guys will always end up profitable at the end of the month if you really make your losers small and make sure your winners remain big. This is going to sound crazy, but I had someone recently who lost 6 trades in a row, was down 6%, and then 2 trades I called that went 1-to-3 got him all the way back in 2 trades. Imagine losing 6 trades. Your psychology's messed up. You think you're an awful trader, but you trust the process, and then those next 2 trades you take, you make those 1 to 3s and you're back up. You know what I'm saying, guys? That's what can happen with risk to reward. That is going to segue into our third factor that I think played a huge role in making me a profitable trader, which is kind of 2 things that I think go hand in hand, which is risk management / market structure. I'm going to go into detail about what I mean by that, because a lot of you guys are like, no, those are 2 different things. No, I'm about to go into detail on why, to me, those things go hand in hand. A lot of you guys out there are putting your stop losses in just the most awful places that make no sense. You guys are buying prop firm challenges and understanding, all right, if I have a 100K account, I should be risking $1,000, but then you're getting into a trade, and then as soon as you get down into drawdown and it hits 1,000, you're just getting out of the trade where price may be in a valid area that you shouldn't have got out of. It's just because you miss risk. You didn't have proper risk management. If you don't know this, you guys have to calculate how many pips your stop loss is before you get into the trade to understand what the proper lot size you have to enter with is. If you guys on one trade are doing a 10 lot on a 10 pip stop loss, risking about like $1,000, let's say, but then on the next trade have a 20 pip stop loss, but still doing a 10 lot, your guys is, once again, the risk to reward is not going to play out. The percentages are not going to add up. You guys will take, once again, like a smaller loss, like pip wise, like let's say with that 10 pip stop loss, you know, when you lost 1,000, but if you have that 10 lot with a 20 pip stop loss, you're gonna lose 2,000, be down double your risk. So the first tip when talking about risk management is understanding that you have to have the correct lot size and understand how many pips your stop loss is gonna be before you enter the trade to then once again have that proper risk management. And now let's get into market structure. So let's rewind. We're being consistent with the strategy. We have a strategy down. We're now going for risk to reward, but that risk to reward doesn't mean anything if you're not putting your stop loss in the proper place, which goes into market structure. Let's just say, for example, a simple demand play when price is like breaking structure and retesting the demand to continue. A lot of you guys get in on that higher low, but then you're not even putting your stop loss below the higher low. You're putting it a little bit above where price needs to have room to fluctuate. How many of you guys in the chat, I want you to go comment right now, have gone into a trade, it's kind of gone into drawdown and it's hit your stop loss, but it held kind of the low that was right there, like the support, and went back up in your direction. You just got stopped out first. That happened to me a ton when starting a trade, which comes down to your psychology and then also just proper market structure. Guys, if you're getting in at a higher low, put your stop loss below where price made. You know what I'm saying? Don't put it within the little range. No, put it below. Give it room to breathe so price isn't just going to wick down, get you out, and then go the direction. Give yourself some room to, once again, go for that risk to reward and let your strategy play out. That's why I think that like risk management and market structure go hand in hand, because if you don't have proper risk management, but then also you're not like risking based upon market structure, then you're just lost. Don't just get into a trade with a dollar amount like, oh, once it gets there, I'm going to get out. No, you're getting out based upon market structure. And you're like, once this low breaks, it is invalid. It's an invalid trade at that point. No, not, oh, we're reversing a little bit and I'm down 1,000, so I just have to close. No, that is poor trading. That's not even like proper trading. That is just bad risk management and not understanding proper market structure. A lot of you guys focus on the dollar amount, which is the first step of risk management of, all right, I'm only going to risk this amount every trade, but then it goes into the market structure of like, all right, yes, you are risking that amount and you're starting to get risk management down, but you're not putting your stop loss based upon proper market structure, which once again is just going to like eat you up in the long run. So to wrap up what we've talked about and summarize, the 3 key factors that I think played a huge role in making me a profitable trader was first, consistency. Second off was risk to reward, and then third off, risk management with market structure. These 3 things, if you really dial it down and understand what I'm saying, you go and apply it to your charts, you're going to see your trading cards start double, triple, because of, once again, these are so overlooked. There's the most simple things that, once again, you know the names of it, you know about consistency, you know risk to reward, you know market structure and risk management, but you're not, once again, diving down and really understanding the characteristics and really key things within it that, once again, make a profitable trader. I highly recommend you guys to go back in the video, take some notes, and if you have any questions, leave a comment below or DM me on Instagram at Luca.NoLimit, and I will for sure help you guys out as much as I can. I'll send you guys a voice message explaining anything you may still be having troubles with. And if you're still here watching the video, I have a special discount code for you guys to once again come and join and learn this more in depth. Whether it's being consistent with the strategy, learning more about risk to reward and having an exit strategy, or just learning more about, once again, risk management and market structure, go click below, join my VIP guys, and use code YouTube. You'll get 15% off to come and join. Thank you guys for watching, and make sure to like and subscribe. Leave a comment below what you learned from this video or if you have any trouble. I appreciate you guys. New videos coming soon. Love you guys. Catch you on the next one. NLT to the moon. Let's go.